Welcome to this tutorial on trading futures on Etoro, a popular online trading platform. In this comprehensive guide, we will explore the world of futures trading on Etoro, covering key concepts, practical examples, and best practices. First, let's define what futures trading is. Futures trading involves buying and selling contracts that obligate the buyer and seller to trade an underlying asset at a predetermined price on a specific date. This type of trading allows investors to speculate on price movements of various assets, such as commodities, indices, and currencies. Etoro is a well-established online trading platform that offers a wide range of financial instruments, including futures contracts. To trade futures on Etoro, you need to create an account and deposit funds. Once your account is set up, you can navigate to the futures section and browse through the available contracts. Etoro offers a variety of futures contracts, including popular ones such as crude oil, gold, and the S&P 500 index. You can trade these contracts using leverage, which allows you to control larger positions with a smaller amount of capital. However, keep in mind that leverage can amplify both profits and losses. To place a trade, simply select the desired contract, choose the direction of your trade, and set the amount you want to invest. You can also set stop loss and take profit levels to manage your risk. Etoro's platform is user-friendly and provides real-time market data, charts, and analysis tools to help you make informed trading decisions. One of the key benefits of trading futures on Etoro is the ability to diversify your portfolio and hedge against potential losses. By trading futures, you can gain exposure to different asset classes and reduce your reliance on a single market or sector. In conclusion, trading futures on Etoro can be a great way to speculate on price movements and diversify your portfolio. With its user-friendly platform, wide range of contracts, and competitive fees, Etoro is an excellent choice for both beginners and experienced traders. Remember to always use proper risk management techniques and stay informed about market developments to maximize your trading success.